Welcome to Inside India. I'm JP Ong. Here are your headlines. The Indian market's looking to stabilize after another down day. But with President Trump escalating tariff threats and time ticking to avert a U.S. government shutdown, there's no lack of risk factors for trade today. Moody's affirming its ratings on India, maintaining its stable outlook driven largely by domestic strength. And Tesla starts delivery of its Model Y in India, adding complementary wall connectors to make charging easier. The U.S. EV giant has its competition cut out for it, though, as it goes up against Vietnam's VinFast, which has a cheaper proposition. We'll hear from the CEO of Vin Group Asia coming up later on in the show. Good morning and happy Tuesday. And as always, we start off with a quick look at how Asian markets are faring at the Tuesday morning session. And it's looking fairly stable but cautious for the most part. We are seeing the likes of the ASX 200 in Australia flat to the upside so far in today's session. The Nikkei 225, though, the other way flat to the downside. The Chinese markets also in focus with the most recent PMI figures for China coming in once again at a contraction, but slightly better with economists surveyed by Reuters were expecting the Shanghai Composite in the green by about 0.1%, while the Hang Seng just taking a bit of a step back down by about 0.8% of a percent in the red. Indian markets also set to come online in about 45 minutes, and we're going to take a look at what GIFT Nifty futures are indicating. And once again, they are at least looking a bit hopeful today, hoping for a meager gain, trading about 65 points above the Monday close. But again, it's that same refrain, that same tune, because we've always seen it trending higher than the previous day's close. But currently, the Nifty is still on a 7-day losing streak and did fall to about 24,634 points at the Monday close, actually. The Indian rupee also looking a bit softer today, 88.72 against the US dollar. It continues to hover around its weakest levels on record, and we'll see if that trend or downtrend for the Indian rupee continues as the Tuesday progresses. Meanwhile, the U.S. government is barreling towards a shutdown after a meeting between President Trump and Democratic lawmakers ended without a deal. The differences, as always, are along party lines. The Republican Party wants to extend current funding levels for 7 weeks, while Democrats are pushing for an extension on health care subsidies. The Senate plans to have another vote on funding on Tuesday, but without any progress, a shutdown will likely take place from midnight on Wednesday.
If he will accept some of the things we asked, which we think the American people are for, on health care and on rescissions, he can avoid a shutdown.
I think we're headed to a shutdown because the Democrats won't do the right thing. I hope they change their mind, but we're going to see.
In Washington, a new bipartisan push is underway to tighten H-1B and L-1 visa rules. Senators Chuck Grassley and Dick Durbin have reintroduced the legislation to overhaul the H-1B and L-1 visa programs. The bill seeks to raise wages, limit eligibility, and curb what they call abuse by big tech employers. The senators have also written to companies like Amazon, Google, and Meta, asking why they're still using foreign workers while laying off Americans. For India, the biggest source of H-1B talent, this could become a major flashpoint in the upcoming trade talks. And in trade news, President Trump, meanwhile, is expanding his tariffs yet again, signing a proclamation just a few hours ago where he announced 10% duties on wood products and lumber imports set to take place October 14th. Tariffs for vanities, kitchen cabinets, and upholstered furniture, which he announced last week, also take effect in about 2 weeks. Come January 1st, the 25% rate on cabinets will double, and the rate on furniture will increase to 30% if trade deals aren't made. Trump's also warned that countries that do not manufacture furniture in the U.S. could face an additional tariff rate. And the tariff push is also targeting multiplexes now. Trump says he plans to impose 100% tariffs on movies produced outside the United States. Now, it's not clear how these tariffs will be applied or who will pay for it. The majority of Hollywood productions have at least some of production overseas, as attractive tax incentives from shooting destinations like the UK and Canada help them keep costs down. Foreign films, including Indian and Chinese, count the US as one of their biggest overseas markets. Let's talk about India accelerating its shift towards clean mobility. The government has rolled out detailed guidelines under the PM eDrive scheme to set up over 72,000 public EV charging stations across the country. The move is expected to sharply expand charging coverage, both within cities and along the national highways. The $225 million initiative includes a tiered subsidy framework. Under this, the government premises will get a 100% subsidy if they provide the EV chargers to the public free of cost. Right, keeping it with electric vehicles in India, Tesla has officially begun deliveries of its Model Y electric SUV in the country. This just 2 months after opening its first showroom in Mumbai. The EV maker is also offering each customer a complimentary wall charger with their vehicle to enable easy home charging. The Model Y is the world's best-selling EV and is priced between 6 to 6.7 million rupees. Tesla has also opened a second experience center in Delhi and plans to roll out more deliveries in the coming weeks. I told you we're going to talk about EVs in India, and let's talk about another foreign EV maker that entered the Indian market at the same time as Tesla did. Vietnam's VinFast is speeding into the market with 2 new models and plans to build charging infrastructure in dealership networks. The EV maker recently signed contracts with major banks, including the State Bank of India, to provide inventory financing for its exclusive dealer network. VinFast has set up a facility in the southern state of Tamil Nadu that can build up to 150,000 electric vehicles each year. And we're pleased to say we're joined by Pham Sang Shao, who is the CEO and Managing Director of VinFast Asia, and he's also the head overseeing VinFast's very ambitious expansion into the subcontinent and the Indian markets. Mr. Pham, thank you so much for joining us. Look, it's barely been a month, actually, since VinFast made that exciting and big splash entering the Indian market, which is one of the fastest growing markets in the world. I believe you've launched so far the VF6 and the VF7. Perhaps a little too early to ask about sales numbers so far, but what's been the reception from the market so far? What kind of sales have we seen so far, reservations have we seen for these 2 models that VinFast is trying to foray and push out into the Indian market?
Thank you very much for the invitation. The response for the market is quite positive. We have very good reservation, and the demand is high. Now for us is how to increase production on time in order to be able to deliver the cars before the start of the festive season, which is Diwali. So the market response in overall is very positive. Thanks God.
Right. So 50,000 vehicles is the initial production that's being brought out of the factory in Tamil Nadu. And I think VinFast said that that there is a possibility you could expand it up to 300,000 vehicles a year. Based on the reception right now, might VinFast consider increasing that expansion? Or do you think 50,000 is going to be okay for the next year or two?
Even now, we are considering to immediately move to the second phase of expanding our factory. So the process of applying for the new environmental clearance has been underway in order to prepare for the expansion of the second phase. So the second phase, we aim at 150,000 vehicles per day. So that is thanks to the positive reaction of the market.
Okay, this is a fast-growing market, and perhaps one of the reasons why VinFast said, you know what, let's try to shift our focus more towards India and even Indonesia in that sense, Mr. Pham. But it's also a very competitive market, we've learned, with very strong local players, the likes of Tata, for instance, and MG Motors comes to mind. You know, we also have news of Tesla coming into the market just a week or two after you guys decided to launch and officially launch sales out there. What's the strategy now to carve out market share? Because it seems that every week, sir, it's getting even more competitive and even tighter in the Indian electric vehicle market.
Yes, it is. Indian market is a very potential market, but at the same time, it's a very competitive market. That's why we come up with a very comprehensive policy of excellent product, affordable price, and excellent after-sale policy. But at the same time, we are going to bring in the whole ecosystem of VinFast, and that whole ecosystem of VinFast is comprised of the good network of dealers, a very good production base, a very good network of third-party workshops and authorized workshop, a readiness of the platform, which is a taxi. And finally, we are also launching the rental car. So this is the whole comprehensive ecosystem of VinFast. Then it will also be backed up by the whole ecosystem of Vingroup. So having said that, I mean that we come here not only to sell the car, but to build the whole ecosystem, varying from charging point to a good network of repairs, good network of dealership, good network of charging point.
Mr. Pham, that's a lot, and it seems like a very comprehensive plan on the part of VinFast. But just staying before we get into each of these parts of this comprehensive plan, I do want to point out that foreign car makers haven't had it easy in VinFast. I'm sure you've noticed, or you took note of the recent reports that Volkswagen is going to restructure its Indian operations. It seems that Hyundai, while they've been there for quite a while, can't seem to find a way to really break out of some of the competitive pressures there. Even BYD, which seems to really crush it in many foreign markets, is having a difficult time in India. So what's giving VinFast confidence that it can do better than some of these other tried and tested EV makers that seem to be finding the Indian market one of the more challenging markets to really carve a niche in?
Okay, let us deliberate a little bit about our strategy in India. VinFast debut in India is the result of a focus of 2 years journey marked by vigorous planning and execution. So have conducted a number of custom clinics to develop products tailored to the Indian markets and also showcase our diverse portfolio of local consumers and Bharat Mobility in January 2025. And before that, we also conducted a number of car clinic. And then from initial feasibility study to our official launch, the process has been very carefully monitored and followed. And during that time, my team and I have traveled to 6 states and 16 locations in order to identify a good location for the production facilities. And within a span time of 15 months, we've been able to develop and build a full-fledged, highly automated production facilities in Tamil Nadu. So our strategy is coming from studying the demand, the requirement of the Indian market, moving to immediately production, skipping the step of importing CBU. And we aim to have a very comprehensive ecosystem. As you may be aware that when you launch our car, that car is supported by free maintenance, 3 years of free maintenance, 3 years of free charging point at our V-Green charging point. And we established our third-party repair across India, which is much different from other car-like OEM.
So key to any car maker's success, whether you be ICE or electric, Mr. Pham, and again, sorry if I'm car-splaining, that's not my intention, is really making sure that your supply chain is quite solid. I'm curious as to what VinFast supply chain and supplier base looks like. How much of that is Vietnamese components, Chinese components, and is there room for Indian EV parts makers to perhaps enter the supply chain for VinFast and could potentially make it even more lucrative or even more affordable for VinFast to produce cars in India?
That is irreversible. We are aiming to have a higher level of localization in order to bring down the BOM cost and in order for us to be more competitive. At the time being, we are in the process of CKD, so we import partly the component and parts from Vietnam, and we also have a certain level of Indian suppliers to those parts. But eventually, we will try to bring up our localization level by engaging more local suppliers. In our factory area, we have already reserved what we call supplier park. We invite Indian suppliers to consider providing us a high number of components that they made in India, and they can shift part of the production to our facility in order to save the logistic cost. And gradually, we will build on those network of local suppliers, because we believe that at the end of the day, we need to rely on those network of local suppliers in order to increase our competitiveness.
Yeah, Mr. Pham, is there a target percentage in terms of local suppliers? Are you looking at 30% local suppliers down the road, 50% local suppliers?
Yes.
And if so, yes. How long do you think it's going to take for VinFast to develop that percentage local supplier base? Because these things, they don't happen overnight, right?
Right. It's as you mentioned correctly, it's not overnight. And we have already started the process of scouting our local suppliers. We send our people to various local suppliers meetings. We try to compare the parts provided by local suppliers with foreign suppliers, and we try to do the calculations in terms of how to make it more effective in terms of production, in terms of logistic fee, and then gradually we try to increase that level. So at this stage, we cannot tell you what is the level level yet, but I know that local Indian supplier take a certain amount in our overall spare parts and component for the time being, although we are doing CKD, and eventually we will try to achieve that. And of course, I think that perhaps at the end of the circle, we may achieve 50% down the line when we achieve very high volume in India.
How long do you think would it take to get to 50%, Mr. Pham? 2 years, 3 years, tomorrow?
I cannot tell you at this stage. Let's see how the market responds, and let's see how local suppliers come to us with their proposal.
Okay,
and we just started, we just launched more than 1 month, and the response is so positive at the time being. So we are not thinking at this stage yet about how to achieve the target of high localization.
Right, fair enough. What about your suppliers in Vietnam? Will they be setting up shop in India to support your operations? And how soon can we possibly see that if that is a yes?
Yeah, at the moment, we are doing very well in terms of with all this support of our network that we have built so far, all the local suppliers, and the majority of the supplier of our component come from Vietnam. As you may be aware that in Vietnam, we have achieved 60% of localizations, and we have the target of achieving 80% of Vietnamese localization. So that is the success story in Vietnam, and we would like to duplicate that success story in Vietnam here in India.
So let's talk about something that VinFast once proposed when you were going into the U.S. market, and that's battery subscriptions. If I'm not mistaken, VinFast actually backed off of doing that in the United States for a number of reasons, actually. Is the possibility of battery subscriptions going to come to India? Is that part of the plan, perhaps, in India, or do you think that it's going to be a different strategy with regards to how you're going to handle batteries there? Will they just be built in at the moment, or is the possibility of a battery subscription option there? What are your thoughts, and what is the plan for VinFast in this particular aspect, sir?
Let me start by saying that in VinFast we are very flexible and we move very fast in order to be able to respond to the complexity of the market. So that is the reason why we can change our policy overnight in order to be able to capture the opportunity if those opportunities are available and emerge from the market. And we can adjust our policy immediately if we believe that the price product first, the price policy does not meet the expectation or may create some issue for us. So starting from that perspective, we have introduced battery subscription as one of the options in some of the markets. And in some of the market, if the response is not positive, we cancel it. And if it's good again, we reintroduce it again. Like in Indonesia, we reintroduce it again. The key matter of that policy is that how we tie up with the bank in order for the bank to be able to finance both the chassis and the battery. And you know that in India, we have been able to tie up with 7 banks for our detailed financing and dealer financing. And in India, I would say that the banking sector is quite mature and quite developed. We have been able to achieve zero down payment for most of the banks. And most of the banks send their people to our showroom in order to assist customers once they decide to buy our car. So they check their past history of past, and they move immediately for that. So I think that is battery subscription is only one of the policy that we are applying in order to increase our efficiency in sales.
Yeah, Mr. Pham, you mentioned one word that I wanted to touch on, that I wanted to go back to, and that's policy, and how policy perhaps, it all depends on how the policy develops in India. You also mentioned in the past that policy sometimes might lag that development of an industry. And it's not just something that happens in India. It happens in many other sectors, many other countries. And sometimes you need to move before policy and not wait for policy to develop. You have to move before it does. Is that a bit risky, though, given the size of some of these investments, to move before policy actually develops? Because on one hand, it might be too late before you move, but at the same time, it is a bit risky because of the uncertainty of how the policy might develop once it catches up.
For us, we have studied well enough the market before we make a final call to go into one single market. So put it this way, if the government give more incentive with new policy, then VinFast will be able to enjoy more incentive. Otherwise, we are doing well, even with the absence of that policy, of the new policy. So if we are lucky, then we benefit more incentive. If we are not lucky, we continue to benefit the old policy, which we believe it is also beneficial to our operation in a certain market. Needless to say about single market like India.
All right, Mr. Pham, last question. So you mentioned that it's important to establish the VinFast ecosystem. You're going to two-wheelers, ride-sharing service, fleet subsidiaries. The concern from some skeptics might be that VinFast might be stretching itself a little too fast, going a little too fast and too big, too soon into India. What do you say to people who might be worried that VinFast might be stretching itself too far across too many things as you try to develop your presence in India?
I understand fully that concerns because those people do not understand fully our policy and our intentions. For instance, when we move in, when we started deciding our car, before being able to sell our car, we need to have the factory, right? And in order to boost the car sales, we need to have a good network of charging point, right? And in order to have a good network of charging point and a good car volume, we need to advertise the people. And the best way to advise the people is to let people to be driven in the car, which is our taxi, right? So, and in order for the customer to get used to our quality in terms of after sale, in addition to the authorized traditional or conventional authorized authorized dealer workshop, we team up with the third-party workshop in order to provide additional repair or workshops. So this is the whole ecosystem that make up each other, which is mutually reinforcing. So this is not stretching out. This is the strong policy of VinFast, and that is the unique selling point of VinFast, I believe. And that ecosystem of VinFast is backed up by another ecosystem of VinGroup. So I mean, it's everything is go in tandem and in parallel, and supporting each other, and make sure that all the different P&L are successful equally. So there's no question of stretching. Yes.
Understood. Mr. Pham, we only have about a minute left, and I have more questions, but I'll end it with this. You have the VF6 coming in, the VF7. Are there any plans to introduce new models in the future, and which models might these be? Just quickly in a minute, sir, if possible.
Yes, we have 9 models in the pipeline, and we want to launch every model, 6 months, every one model. So perhaps the next model is the 7-seaters, and or perhaps another model down in our lines. So it depends on the markets, on our market research and the reactions for the market. We make a decision in a due course, but very likely that we have the 7-seaters being available early next year.
All right. So it seems that look out India, because VinFast isn't done. A 7-seater might be in the works, but all depends on how the market develops. Pham San Chow from VinFast Asia, we thank you for joining us today to share with us updates on how VinFast is doing in its first month in the Indian markets. Appreciate the time, sir, and I hope you have a good day. We will be back with more on Inside India, but we'll be taking just a quick 2-minute break. Don't go away. Just get that cup of coffee. We'll be around. Take a quick check now of oil prices. We come back from the break and they're doing their best impression of David Bowie and Freddie Mercury. Under pressure again. Prices slumping 3% overnight with WTI sitting below $63 a barrel right now. Brent crude there also down to about $67, just north of that. The slide follows the resumption of crude exports from Iraq's Kurdistan region and expectations that OPEC Plus will approve another production hike at its meeting this weekend. Analysts say even modest output increases are adding to fears of a looming supply glut. Meanwhile, Total Energy CEO Patrick Pouyanné says the French energy giant could divert Russian LNG to India and Turkey if the European Union imposes a ban. Speaking at an investor conference in New York, he also mentioned Total Energy's 20% stake in Adani Green Energy, suggesting part of it may be sold to capitalize on the Indian renewable producer's rising valuation. Total Energies bought into Adani Green in 2021 for about $2 billion. Now, we are counting down to the market open in India about 14 minutes before the opening bell. One last look at how Nifty futures are shaping up. We are seeing them still holding on to a call of about a 60 or about a 70-point intraday gain. But remember, it's been flashing gains before the opening bell, only for the Nifty to end up in the red for 7 straight sessions now. It's one of their longest losing streaks in about 7 months, actually. The Indian rupee also a bit softer today at about 88.68 against the U.S. dollar. India's industrial output slowing slightly in the month of August as well, with fresh data showing output rose by about 4% on year, below expectations of about a 5% uptick. Most of the growth last month was driven by mining, which rose 6% after 5 months of decline, and production of infrastructure goods. Manufacturing output rose 3.8%, led by basic metals and motor vehicles. The data comes as the RBI, or the Reserve Bank of India, prepares to announce its interest rate decision tomorrow. Meantime, Moody's is keeping India's credit rating unchanged at Baa3 with a stable outlook. The global ratings agency says India's economy remains resilient and is supported by strong growth, healthy foreign reserves, and a reliable domestic investor base that continues to fund government borrowing. This decision comes just weeks after S&P upgraded India to BBB for the first time in 18 years, while Fitch chose to hold its ratings, citing high government debt. Moody's, too, does sound a note of caution, saying recent tax cuts to boost consumption could hurt revenue collections at a time when debt levels remain elevated. An upgrade, it says, will depend on whether India can reduce its deficit and bring down debt more meaningfully. Well, let's talk about one asset class and one particular investment that seems to be can't do any wrong since the start of the year. That's gold prices, which once again is hitting fresh record highs again today. Again, you're seeing the precious metal today, the safe haven asset, jumping up to about 3,860, just south of that, actually. And again, signs again that they will be looking for new records as the days commence. The precious metal the other day surged past 3,800 as expectations of further U.S. rate cuts and worries over that potential American government shutdown drove investors towards safe haven assets once again. This rally is also reshaping how and where gold is stored and traded. According to a Financial Times report, countries like the UAE, Hong Kong, and Kuwait are now racing to become regional hubs for gold storage and trading, with vaults and new futures contracts aiming to challenge the long-standing dominance of London, New York, and Switzerland in global gold trading. India, however, ranks much lower on a per capita basis. So a lot to talk about when it comes to gold and the precious metal, and we have just the man to help us sift through all the exuberance surrounding the safe haven asset of choice so far in 2025. And Shao Kai-fan is the head of Asia Pacific, excluding China, that is, at the World Gold Council, here to help us make sense and also help better understand why gold can't seem to do any wrong this year, or maybe it can actually. Shao Kai, thanks so much for joining us. And again, we have to start with the recent run-up in gold prices. Another record high. It's like a broken record at this point. Every day it seems like there's a new record actually for gold prices. And the reasons, again, are numerous. I wonder, though, how much more room do you think gold might have to rally, especially given how strong it seemed come rain or come shine in 2025?
Good morning, JP, first of all. I think it has been an incredible year for gold, of course. We're up over 40% in U.S. dollar terms year to date. We don't forecast the gold price at the World Gold Council, but I do think that there's still a lot of strength fundamentally for the underlying areas of demand in the gold market. Certainly, India is a very strong segment of demand, but besides India, which I'm sure we'll talk about in more detail later, central banks are still big buyers of gold. They've moderated a little bit since last year, but they're still very strong compared to where they were historically. lately. ETF investors, though, have been very, very big into the gold market this year. The first half of this year has seen remarkable inflows into gold ETFs across almost every region, including India. And I think that's been a major area of support, too. So if you look at those factors you talked about just a few minutes ago, about a potential U.S. government shutdown, concerns about U.S. debt, for instance, future path of the U.S. dollar, and just all these geopolitical instability issues that we've been dealing with for a while now, I think there's still a lot of interest in moving into gold, and gold can play a very important role in helping investors navigate these uncertain times.
You know what's been interesting, though, Xiaokai, when you look at the run-up in gold, and maybe you're not as surprised as I am, but it seems, as we mentioned, that whether the markets are risk-on, whether the markets are risk-off this year, gold seems to have maintained its steady march up. In fact, even when the dollar strengthened, even when you saw the S&P 500, for instance, rise up, you saw gold just moderate its march, but still marching higher. When's the last time you've seen a gold rally this sturdy? Or is this just par for the course based on what you've tracked with regards to gold over the years?
Well, I think one thing that's important for viewers to understand about gold is that it has a dual nature. Many people focus on gold as a safe haven asset, as something that performs well during risk-off events, which it does do. But it has a dual nature because almost half of gold demand is still jewelry and industrial demand, so pro-cyclical elements. When there's more money around, when people are feeling better, they buy more of those things. So that means gold actually can perform well when other assets, risk assets, are performing well too. I think this year, of course, is an extraordinary example of that. But certainly it's not surprising, because another relationship we're seeing starting to change a little bit is that relationship between gold and the U.S. dollar and gold and U.S. rates. Traditionally, when the dollar is stronger and when U.S. rates are higher, gold does not do as well. We've seen that relationship weaken a little bit, largely because the base of who's buying gold has expanded so much beyond the U.S. and Western markets. India and China, of course, are very large consumers of gold. They're buying gold for slightly different reasons. They're not just looking at Fed rate decisions, for instance.
Mm-hmm. Yeah, and I want to get into that just a little bit, but you mentioned a while ago the buyer base, if I can call it that, for gold seems to have diversified, and really you're seeing them buying more gold in other parts of the world. Are they buying it using the U.S. dollar, or are they buying it with other currencies right now? Are you seeing also that the demand is coming through from multiple channels and multiple currency channels as well? I'm just curious.
Definitely multiple channels. Of course, in retail markets on the ground, you're going to be buying it in your local currency, but ultimately that importer probably had to pay in U.S. dollars at some point to get the gold into your country. Central banks are buying gold mostly in U.S. dollars on the international market too. So gold is still predominantly priced in dollars, but there might be some developments changing that in the future. We'll see, with Hong Kong saying it wants to play a bigger role in the gold market. Maybe the advent of RMB denominated gold is a possibility in the future, but we'll see.
Yeah, so the reason I'm asking about the sturdy rise of gold is because when you see the rally this sturdy as compared to other years also, it does raise a question as to whether or not there are people who are a bit more concerned in the markets. You mentioned a while ago that central banks have continued to buy gold, and there have been some reports that the appetite seems to have picked up a little bit, actually. Again, what are some of the conversations the World Gold Council is having right now with central bankers, and why the appetite seems to have picked up a little, why they're going back to the gold buffet table, if I can call it that, a little bit more now than previous years?
Well, they've been at this buffet table for centuries. Central banks have been using gold now for a very, very long time.
But they've been going back more often this year, right?
Much more often, I would say. Certainly, the last 3 years have been extraordinarily high levels of central bank gold buying. They bought over 1,000 tons of gold per year since 2022, whereas the previous average between, let's say, 2010 and 2020 was less than 500 tons. So they're now double the size that they were in the gold market before 2022. I think geopolitical risks is certainly a big part of that. Just the different wars that we're unfortunately experiencing now, this instability in terms of trade policy, managing all that has become a much bigger job for reserve managers. And I think they are turning to gold as a way to mitigate those risks, a way to create more resilience in their portfolio.
Okay, so let's talk about the demand side, because we've seen institutional demand either through ETFs or central bank buying really rise. And we have to go into the two biggest markets right now, India and China. I'm assuming that demand in these two big demand drivers has risen. But can you perhaps help our viewers understand the intricacies or the differences between how the Indian and Chinese demand markets work, especially in terms of the demand drivers? Is there a different reason why a Chinese gold buyer would go into the markets versus how an Indian buyer would approach the markets, Xiaokai?
Yeah. So China and India are the world's largest and second largest consumer markets for gold, so very, very important for the gold market overall. I'd say one of the key differences is India, of course, has a very, very deep cultural affinity toward gold. A lot of gold jewelry buying for weddings, for festive occasions, for special occasions. Of course, people buy gold for those those reasons in China as well, but I don't think it's quite as pronounced as it is in India. In China, we're seeing a lot more retail buying of bars and coins, for instance, and I think that has to do with specific circumstances that have been happening in China for the past few years. The economy has been slowing down. The stock market and the housing market have not been performing quite as well in the longer term. And of course, there's fears of, U.S.-China geopolitical confrontations and things like that. That's really made a lot of Chinese retail investors buy bars and coins, and that's been sort of the mainstay of consumer buying of gold in China.
Right.
Yeah.
If the buying in China really is being driven by this search for certainty, if I can call it that, because of the downturn in the markets, there is a hope that sooner or later China will rebound. If that rebound happens, could we also see that demand perhaps soften a little bit and perhaps make gold shift from fifth gear to fourth gear, for instance?
I think that now that people are used to buying gold and investing in gold in China, they're understanding of the value it can bring to a portfolio, and that's something we emphasize at the World Gold Council. Of course, this year has been spectacular in terms of returns, but you shouldn't look at gold purely from a return perspective. You should look at how it impacts your portfolio from a holistic level, including helping to reduce risk overall in the portfolio. And I hope that Chinese investors are understanding that fact and are going to stick to gold in their portfolios going forward. Now, of course, if there is a rebound, we do expect demand to potentially moderate. But I think that we are moving into a world that's much less certain than before, and having more gold in your portfolio gives you more resilience.
Is India or China showing to be more voracious with regards to gold this year? And again, it's not a competition, but I am curious as to whether or not one is hungrier than the other, based on the trends you've seen this year, Xiaokai.
This year to date, I think both are actually doing very, very well. Both are quite strong. More specifically in August, we did see some outflows from Chinese gold ETFs, whereas we saw inflows into Indian gold ETFs, but for different reasons. I think the stock market in China had a bit of a rebound in August, so that's probably attracting some attention away from gold. In India, though, I think there's still a lot of interest because of just the broader uncertainties we've been talking about, away from investment. With the festive season coming up as well, there's a lot more attention to gold jewelry buying in India too.
So the festive season is interesting because everyone's been talking about it for the last month, especially after the GST reforms were introduced. And as we know, this is also a time when you said the jewelry buying in India during this festive season picks up. But is there a concern that because of how expensive it's gotten in India, especially gold that is, that we might see perhaps a dampener in terms of gold demand? What are some of the conversations and what are some of the trends you're seeing right now in the first few weeks of the festive season there? So
we're already seeing some of the early signs of gold demand pickup for the festive season. Certainly the GST cut in India, I think, will put a little bit more tailwind to gold buying despite the higher prices. But one fact we always see about gold is that for gold jewelry demand specifically, when gold prices are higher, the amount of gold jewelry that's bought is usually softer. But what we've noticed recently in India and in many other jewelry markets is the value of the gold jewelry being bought has stayed consistent. So the demand to buy gold jewelry is still there. It's just that with the higher gold prices, you can't afford to buy as much gold. So some of the trends we're seeing are a shift to lower caratage gold, smaller pieces, for instance, but this is still anecdotal data for right now.
Okay, one thing, I did talk to an investor the other day, Xiaokai, and I want to get your thoughts on this. What we've noticed that it seems that there's a rising tide that's really benefiting a lot of precious metals. It's not just gold, but silver has also been on an uptick. And what he said to me was he's concerned about the fact that the differential between gold and silver is also narrowing during this time, which is telling him that perhaps there might be people who are looking for other precious metals, cheaper ones like silver, because right now any precious metal, any safe haven asset is where we have to go. Again, this is a broader market commentary, but is this a concern that should investors perhaps be concerned that that risk-off sentiment is indeed picking up because it's not just gold that's getting a lot of phone calls; it's even silver right now.
There's only one gold, and that's gold.
Okay.
So, yes, I've been hearing anecdotally that the other precious metals are benefiting from just a scramble into the space overall. But I think you have to understand that the other precious metals have quite different demand bases versus gold. Gold has a very large financial component alongside a very large consumer and industrial component as well, whereas the other precious metals are predominantly more used for, industrial use and less so for financial use.
Okay. So let's talk about how people are investing in gold now, Xiaokai, because what we've perhaps learned over the course of this year is that regardless of what happens, and you can go back decades, maybe even centuries, that gold as an asset class has held its own. But investors changed, especially generations. Has the World Gold Council noticed differences in how generations invest? Are the Gen Zers still interested in gold, and are they buying it in a different way as, say, their uncles or their boomer grandfathers are doing? Talk to us about whether or not there's a generational change, shift, or divide in how these generations are approaching gold now.
Yeah, certainly the younger generation, they're getting more used to gold. They're seeing these headlines about gold. They're understanding why it's important as an asset class. This is a generation that's facing a very different job market, economic outlook than previous generations. So I think they do have to consider how best to invest their money to preserve wealth and preserve buying power over the course of their lifetimes. And gold, I think, is a way to do that for them. In terms of how they're buying it, we're seeing a lot of new ways start to emerge. Gold ETFs have now been on the scene for over 20 years, and they did revolutionize the gold market and are still a very, very big part of how people invest in gold if they don't want to buy physical gold, for instance. But besides ETFs, we're now seeing tokenized gold start to appear. We're seeing different ways of buying smaller fractional pieces of gold. And in markets like China, for instance, where there's a lot of innovation around finance, we're seeing smaller amounts of gold being transacted through digital means. And I think a lot of the younger investors are attracted to the smaller amounts because they can only invest in smaller amounts, for one, but also the ease and the tech savviness of those channels is better for them.
So do you think that in the future we're going to see more people buying gold digitally rather than physically, or do you think that there's still value in perhaps having tangible access to gold, regardless of how expensive it is? Because I can imagine that if I wanted to buy a gold bar right now, I'd probably have to sell my left kidney. And even my right, maybe.
Well, it depends on the size of the gold bar.
And my kidney, right? So,
if you want a kilo bar, it's about 130,000 US dollars, thereabouts, maybe 150 even at today's prices. But I think that physical gold is always going to have a very special place in people's hearts. People like the look, the feel, the weight. They like the fact that they can hold it and they can keep it in a secure place. But of course, that doesn't mean that the advent of new technology is going to turn people completely away from physical gold. I think they'll still want it. These new channels are going to be more and more important because it'll mean that you can get access to gold more easily, more quickly. The transaction will be easier. And if we're talking about, let's say, certain types of tokenized gold, you might be able to even transact when markets are traditionally closed, for instance. And also the smaller amounts, right? Being able to buy smaller amounts of gold at these prices, for instance, might be more intriguing to newer investors as well.
So just quickly, Shokai, if you've outlined a couple of options there, but I guess the broader question for many investors who say, you know what, maybe I'd like to get into gold, but geez, it's really expensive, and I only have two kidneys, as I mentioned. How would you get into gold in this particular market when the entry point or the access to entry seems to be quite high right now?
Well, yes, the gold price, of course, is doing very, very well. But I think, like I said earlier, you have to look at gold holistically. What's the impact of gold on your portfolio's overall performance? If you have, let's say, a 5 or 10% allocation to gold, that might improve risk-adjusted returns for the entire portfolio, regardless of what the gold price is at the current moment. You have to look at how gold performs in relation to the other components of your portfolio. And if you find that it can improve overall risk-adjusted returns, then you should have a little bit more gold in your portfolio to get that, regardless of the price.
Okay, and whether it's digital or physical, just try to get is that the advice from the World Gold Council right now?
Whatever floats your boat, whatever you think is the best way for you personally.
And as long as you don't lose a kidney doing it, right? Okay.
Well, as long as you don't lose your gold if you're going to hold it physically, make sure you know where it is, right?
Okay.
Yeah.
All very salient advice, Shokai Fan from the World Gold Council. Thank you for joining us today and helping us understand the changes in the dynamics of the of the gold market globally, and also how it's impacting India right now. Appreciate the thoughts, sir. Indian markets, as you mentioned, have joined the trading day, but we will look at some movers in Mumbai just after a short break. We'll be back in about 2 minutes, and remember, you're watching Inside India. right, Indian markets online now for the last 6 minutes. Let's see what the Nifty 50 is doing today. And a pretty positive start for the Nifty 50, up by about 1/3%, 24,719. A little bit more upbeat than we've seen in recent sessions. Mind you, the Nifty benchmark is indeed coming off of that 7-day losing streak. But is today the day it breaks out of that funk? We shall see. The Indian rupee today softer, though, at 88.71 in today's session. Again, perhaps also factoring a lot of these uncertainties that are happening, especially with the U.S. government shutdown and continued geopolitical instabilities right now. The rupee continues to soften today at 88.71, as we mentioned. Well, let's take a look at bond yields as we wait for the Reserve Bank of India's policy decision, which comes tomorrow. Take a look at where the various tenors are right now. And let's just take note of the 10-year T-bond right now, which is now trending down by about 0.1% today at 6.54%. Now, there are expectations that the RBI might actually decide to hold off on any rate cuts, but there are a few who do think that the onus is on the RBI to perhaps provide more support for the economy through a rate cut. And if they do cut policy rates, you'll definitely see some of these bond yields continue to trend lower and perhaps shift lower if it does happen. But we'll have to wait for tomorrow and exactly when they decide. The 10-year yield is also reacting to another announcement, it seems. And that is, India is set to auction a fresh 10-year bond this Friday to raise about $3.6 billion. The new security is expected to become the benchmark in the coming weeks, replacing the current 6.33% 2035 bond, which has an outstanding of about 1.8 trillion rupees. The government plans to borrow nearly 7 trillion rupees through bonds in the second half of the fiscal year, increasing the share of 10-year bonds and reducing those ultra-long 30 to 50-year issuances. Quick check on shares of Tata Steel, the steel maker taking a major step towards green manufacturing. Tata Steel has signed a non-binding agreement with the Dutch government to transition one of its plants to low carbon production, that is. The Netherlands is ready to offer up to 2 billion euros in support, while Tata's Dutch unit has also sought 300 million euros from the EU Innovation Fund. The total cost is yet to be finalized as engineering work is still underway. Taking a look at another Tata Group company, and that is Tata Motors' British unit, Jaguar Land Rover, says it will resume some manufacturing in the coming days. This is part of a phased recovery following a cyber attack that occurred earlier this month. The UK government has pledged a $2 billion loan guarantee, and JLR, or Jaguar Land Rover, has also secured an additional £2 billion funding facility from commercial banks. The company, which has 3 UK factories and 33,000 staff, has been losing at least £50 million a week during the shutdown. Let's take one final check now of Asian markets. And once again, we are seeing markets more or less steady. We a little bit cautious to the upside for the Nikkei 225 out in Japan, and fairly and moderately stable, that is, for mainland Chinese markets after the manufacturing PMI gauge there came in slightly better than expected, but still in contractionary and below that 50-point mark. The Hang Seng, though, also trading about 0.1% lower. Let's take a look now at the Thai set, which is down by about 0.6%. And of course, we are also zeroing in on those Thai markets in the red today, a day after the Prime Minister Anutin Chanvirakul actually made his policy statement inaugurating the launch of his own administration. He's the third person to assume the mantleship of the Prime Minister role in Thailand since the 2023 election. And in his policy address, he said that the focus now is on lowering debt, spurring the economy, bolstering security, and also focusing on trade. Some of the things that they want to do is to try and make sure that Thailand can join the OECD or apply for OECD membership as soon as possible, offering debt relief to various individuals in Thailand that are suffering high debt levels, and also extending loan restructuring efforts and loan facilities to support struggling SMEs or small and medium enterprises. Remember that there's also the fact that the Prime Minister of Thailand or his administration only has 120 days and has to dissolve the parliament by the end of January, as agreed with the opposition People's Party, to pave the way for next year's general election. So they have a very little leeway, actually, or runway in that particular space. And we're also looking right now at PMI figures. We're just trying to pull those up actually for you guys, just to make sure that we're up to date right now, and just seeing here that the PMI figures, well, we're just looking at it right now for regards to China at 49.8 also, and for that, and manufacturing output right now also. Just Thai August manufacturing output. There we go. Getting our bearings there. August manufacturing output down about 4.2% on a year-on-year basis. That's more than double the contraction that economists surveyed by Reuters were expecting. Just again highlighting some of the economic headwinds and challenges that the Thai economy is facing right now. And definitely their Prime Minister Anutin Charnvirakul will have his hands full. And there's only a 120-day runway actually to accomplish any of these things that he's outlined in his policy. But remember, you're watching Inside In, and that's all the time we have today on the show. Keep watching CNBC because Access Middle East is indeed coming up next. Have a good Tuesday.